or visit myguardiangroup.com.
Introducing the new NCB On The Go account. Live your way with a new flexible account to manage your transactions 24/7. With NCB On The Go, you get free deposits, free ABM transactions, free bill payments with no monthly service charge, and no minimum balance fee. To open your account, you need your TRN, GOJ identification, proof of address, proof of income, and
Become a game changer in the NCB Capital Markets Analyst Program and chart the future of alternative investments, portfolio management and trading, investment banking, and so much more. Do you have at least a first degree in actuarial science, banking and finance, or related fields with a minimum GPA of 3.4 and are ready to change the investment game? Scan the barcode or visit bit.ly/analyst program and apply by May 27. Be a game changer with NCB Capital Markets Limited.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
We know what you want to do more of. And it's not waiting for life to happen. You want to explore more. New worlds, different passions. You want to share more. Amazing experiences, knowledge. You want to care more. For yourself, for the people around you. We know you want to do more things in life. So Clarion does more for you. In choosing the right experts to meet your every need. In products and services to reach your goals. And now, we do more than any other bank, digitally, empowering you with new technology in the hands of best-in-class professionals for more convenient digital tools, a more seamless banking experience, and more precise financial solutions. Clarion does more to bring you, your family, or your business into a new world of banking, so you can do what you really want, to live more. Clarion.
The first sound they make is to simply let the world know they're here. And then it's our duty to help them show the world why they're here in the first place.
Give them every advantage with the Guardian Achiever, a plan that provides for their educational dreams and protects their health and life in the process. For more information, call 888-4LIFE to speak to an advisor or visit myguardiangroup.com.
Introducing the new NCB On The Go account. Live your way with a new flexible account to manage your transactions 24/7. With NCB On The Go, you get free deposits, free ABM transactions, free bill payments with no monthly service charge, and no minimum balance fee. To open your account, you need your TRN, GOJ identification, proof of address, proof of income, and $2,000. That's it. Learn more and open your new NCB On The Go account online at jncb.com/onthego.
Good day and welcome to our 2022 second quarter investors brief. I'm Dennis Cohen, Group CFO and Deputy CEO, and with me on the panel is our President and Group CEO, Mr. Patrick Hilton, and also Dave Garcia, our Company Secretary and General Counsel. As is customary, I will share highlights of our financial results, after which our President will discuss his outlook and a question and answer session will follow. Yesterday, the group reported total consolidated net profit of $15.3 billion for the half year, a 65% year-over-year increase. This second quarter represents our highest quarter since the onset of the pandemic, with net profit of $9.9 billion and amounts attributable to shareholders of $7.8 billion. The group, through its diversified business model, continues to implement strategies to drive performance and transform our business into a digital-driven financial services organization, and this has positioned us to achieve consistent growth in all our business segments. We are seeing uneven economic recovery across our operating territories and noted improvement in the general economic conditions. We continue to focus on building and improving our capabilities as we expect these to translate to a stronger and more adaptive organization that will be well positioned to grow and thrive in the post-pandemic era. We continue to center our capital management strategies on ensuring business continuity, recovery, and growth post-pandemic. To this end, the Board of Directors thought it prudent to not declare an interim dividend at this time. Now, sharing highlights of our financial results yesterday, the group reported net profit attributable to shareholders of $10.4 billion for the 6 months ended March, representing a 77% increase over the prior year. Operating revenues of $69.3 billion grew by 16%, or $9.6 billion. Banking and investment activities were the main contributors to the improved performance, increasing by 15% to $53.4 billion. The growth was driven by high net interest and net fee income, resulting from increased business activities and general portfolio growth. Increased interest rates in Jamaica, along with the expectation for continued loan growth, should drive higher net interest income in our banking and asset management segments. One-off gains were also realized from the disposal of real estate in our Jamaican banking entity. These revenue improvements were, however, tempered by lower gains from securities activities, reflecting the slowdown in trading activities and general fall-off in bond and equity prices during the period. The net results from insurance activities increased by $2.7 billion, or 21% over the prior year, as life and health insurance activities achieved strong growth, mainly in annuities, individual life, and health. Notwithstanding the overall commendable revenue growth in the insurance business, the general insurance segment saw a reduction in net revenues due to increased claims, margin compression, and the impact of rising prices coupled with salary constraints faced by consumers. Operating expenses of $51.7 billion increased by $4.6 billion, or 10%. Professional fees continue to account for a substantial portion of the growth in expenses as we continue to invest in our transformation journey. Notwithstanding the increased expenses, our cost-to-income ratio improved to 72.2% from 75.77% in the prior year. The improved profits also led to an increase in some of our profitability metrics, namely return on assets and return on equity, up 1.54% and 13.24% from 1.01 and 7.39 respectively in the prior year. Looking briefly at our segment performance, we note that 5 of our 7 segments recorded improved performance over the prior year. Our life and health insurance segment was the largest contributor to operating profit, with $13.3 billion, a 14% improvement over the prior year. The segment reflected growth in net insurance activities and net interest income respectively, owing to increased business activities in its major operating territories. The performance was, however, tempered by increased life and health claims and policy surrenders. Additionally, there was higher credit impairment losses and reduced gains in foreign currency and investment activities of $1.5 and $1.1 billion respectively. Wealth recording operating profit of $5.1 billion, an 18% decline when compared to the prior year. This segment reflected a $1.9 billion reduction in gains from investment activities due to adverse market conditions, which reduced trading opportunities for both fixed income and equities. These conditions also adversely impacted its investment banking activities as monetary policy tightening impacted deal flow in the Jamaican market. Treasury contributed $4.7 billion in operating profits, a 2% improvement over the prior year. The improvement was primarily due to portfolio growth and increased asset yields. Corporate and commercial banking reported net results of $3 billion, up $1.3 billion or 79% over the prior year. With our focus on various industries, including infrastructure, energy, and tourism, growth in this segment was mainly due to increased deal flow, fueling a $900 million improvement in operating income. Our consumer and SME banking segment, together with the payment services segment, both reflected improvements in the current year, as both benefited from increased business activity with the ongoing return to normal business operations following the easing of COVID-related restrictions. Additionally, the consumer and SME business segment also recorded a one-off gain from a transaction related to its branch optimization strategy currently being rolled out. General Insurance recorded net results of $1.5 billion, a 65% reduction from the prior year. This segment experienced increased operating expenses of $1.6 billion, driven by claims in property and marine in particular. This was compounded by a $1.2 billion reduction in operating income as a result of decreased reinsurance commission income and increased impairment losses on financial assets. Now looking briefly at the key components of our financial statement of financial position, our asset base was $2.1 trillion, a year-over-year increase of 11%. This rise was spread across all our major asset lines, including investment securities, loans, and amounts due from financial institutions. Our equity declined to $157 billion, down 4% from the prior year, and this was primarily due to declines in fair value reserves arising from markdown of investment portfolio assets. Net loans had commendable growth of 17%, as we had broad-based loan growth in both our retail and corporate portfolios, growing quarter over quarter and also over the prior year. And in spite of the economic challenges, our customer deposits recorded strong growth, increasing 17% to a record $707 billion, while policyholder liabilities grew to $461 billion, 9% over the prior year. Also important to note, all our regulated entities exceeded their regulatory capital and liquidity requirements. Ladies and gentlemen, we continue to navigate an ever-changing environment and remain focused on executing our transformation journey to grow stronger, execute faster, and simplify our operations. I'd like to close by acknowledging our entire team across the region who have given us so much as we work toward the shared goal of building a world-class business, and I thank them for their tireless work in supporting our customers and our communities we serve. I now hand over to Mr. Hilton, who will now share his thoughts, after which we will take questions. Over to you, Patrick.
Thank you. Thank you, Dennis. Chairman, Honorable Michael Leachin, fellow directors and company secretary, esteemed shareholders of NCB Financial Group, our valued customers, executives, management, and staff of NCB Financial Group and its subsidiaries. Good morning and welcome. Before I get into the substance of what I have to say, I'd like to just pause to acknowledge, as my colleague Dennis did at the end, the contribution of all those who have worked very hard, who have been consistently, pushing to get us to where we are today as an organization. We're grateful for the effort, we're grateful for the work you have done, and I just wanted to especially acknowledge all our team members, our customers, our board of directors, all our other stakeholders who have contributed to this outcome. I want to thank you for joining us this morning for our financial year 2022 quarter 2 investors briefing. We appreciate having this forum. It allows us the opportunity to communicate directly with our shareholders and other stakeholders about our performance and about our perspectives on the way forward. Just as the world has started to see an easing in restrictions related to the pandemic, we now have to contend with the uncertainty which has been brought about by the conflict in Eastern Europe. Like the pandemic, we are seeing that there is significant human toll in terms of loss of life, in terms of the disruption of livelihoods, and naturally, as an institution operating in the global, economic sphere, we are concerned about what we are seeing. We have tried to help, in a limited way through the Clarion Foundation, who has donated to the Red Cross Ukraine as part of its support for the Ukraine Fund. The economic ramifications of the war, when combined with those of the pandemic, has not spared any nation or any company from a leadership challenge of a lifetime. But that's life, and we have to deal with it. So when you look at it, we have 2 consecutive globally disruptive events. And so there will be the natural longing for things to return to normal. But therein, ladies and gentlemen, lies the risk. While we cannot control what happens to us, what we can control is how we respond. So sitting around and waiting, hoping for the best, is the clearest path to disruption. And so for us, it is clearly not an option. It is within this context I want to assure you, all our stakeholders at the NCB Financial Group, remains focused, remains committed to our aspiration of being a world-class Caribbean financial ecosystem. I am confident, and you can be confident, in NCB Financial Group's ability to navigate yet another challenge, as our ability to overcome adversity, but not only to overcome adversity, but to also use it as an opportunity to build and achieve great things is core to our legacy. We have demonstrated this time and time again. As the NCB Financial Group celebrates 185 years this year, which is a testament to our resilience over time, I declare that the NCB Financial Group is here to stay, is here to thrive, and is here to grow. We are not waiting for a return to normal. We are forging ahead and continuous evolving to stay true to our purpose of empowering people, of unlocking dreams, and of building communities. I'm going to ask you to allow me to share with you 3 reasons why I'm confident about the future of the NCB Financial Group. And I will share the reasons now, and I will elaborate on each of them a little later. The first one is the breadth and depth of our financial group. The second is that we are constantly planting seeds of change and disrupting our own business model for the benefit of our customers. We don't wait to be disrupted. We disrupt ourselves. The third is that we have a legacy and a mindset of succeeding, not only in spite of challenges, but by leveraging on those challenges. And so, ladies and gentlemen, as I reflect on the first one, which is the breadth and depth of the financial group, I share this perspective with you. The NCB Financial Group is a financial holding company consisting of National Commercial Bank Jamaica Limited and its subsidiaries, among them NCB Capital Markets and NCB Insurance Agency. There's a Clarion Group Limited and its subsidiaries. There's NCB Global Holdings Limited, the majority owner of Guardian Holdings Limited and its subsidiaries. And there is TFOB Limited, a recently incorporated fintech, which is called Link, and which intends to bring new and innovative digital payment solutions to the market. The group operates in 21 territories across the English and Dutch-speaking Caribbean, as well as in the United Kingdom, in the Netherlands, and provides a wide range of banking, payments, insurance, wealth, and asset management products and services which are needed by individuals, businesses, and governments to meet their goals and their objectives. The diversity in our business lines, in our geographies, in the customer segments we serve, and even the skill sets and the capabilities of our people have positively benefited the organization. When there is a downturn in a line of business or a sector, this is typically offset by growth in other lines of business or other sectors. Our breadth and our depth creates a platform for a financial ecosystem which allows us to quickly pivot to take advantage of any opportunities created in any set of circumstances. These factors, along with our can-do and opportunistic mindset, makes us formidable in any set of circumstances. 2, the second reason why I'm confident, we are planting seeds of change and disrupting ourselves for the benefit of our customers. Guardian Life started providing e-pharmacy services to its customers in December 2021. Since then, we have recognized the value of providing end-to-end healthcare services to our customers. Consequently, we have partnered with MDL, a recently established online pharmacy launched in Trinidad and Tobago. Using an integrated platform, our customers will have access to a service that connects doctors and patients with an e-pharmacy facility that will simplify the process of filling a prescription, inclusive of an integrated delivery service. We have also launched our first fintech, Link, which you have all heard about. It is inspired by leading global solutions like Cash App, Zelle, Venmo. Link is an app for sending and receiving money between users. Link also facilitates the transfer of funds to and from local banks and payments for goods and services. Since launch, we have onboarded over 100,000 users, and launch, I think, was in December. And these 100,000 users are immediately eligible for the $2,500 incentive announced by the Minister of Finance for the first 100,000 central bank digital currency wallets opened after April 1. If you are a Link customer, please stay tuned for details regarding the deposit of your digital currency. According to the 2022 PwC CBDC Global Index, Jamaica ranked 4th among a group of 10 leading countries that are issuing central bank digital currencies. The NCB Financial Group is proud that 2 of our subsidiaries, National Commercial Bank Jamaica Limited and TFOB 2021 Limited, have been integral in the pioneering and innovative national initiative that lays the foundation for greater financial inclusion. Link customers will soon be able to deposit and withdraw cash via NCB's intelligent ABMs, mobile top-up, bill payments, cross-border payment, and a merchant portal with merchant services. These are among other features to come. As a financial group, we continue to deploy artificial intelligence and machine learning-enabled solutions to enhance our customers' experiences and drive key business outcomes. At Guardian, we are leveraging artificial intelligence tools to mitigate claims fraud and identify measures to reduce claims costs. At National Commercial Bank Jamaica Limited, our WhatsApp chatbot, Simone, has assisted over 100,000 customers since its inception in 2021. Because the future is digital, we are investing significantly in digital talent. We have employed, offered internships, or contracted through third parties over 100 software engineers, data scientists and analysts, user experience designers, and agile practitioners. We continue to invest in the upskilling of our team members in these skills of the future. Our digital talent investments will continue to grow. In addition, the NCB Foundation will continue to channel over 100 million in tertiary scholarships and grants towards students pursuing digital careers such as software engineering, cybersecurity, data science, digital media, user experience design, and other related areas. These areas are in high demand in our business, and growth in these skills will help to accelerate the digital transformation of our region. We invested in these areas and continue to plant seeds during the pandemic in spite of tremendous global turbulence and uncertainty. As bankers, we are very aware of the power of the law of compounding, which Einstein described as the most powerful force in the universe. When investing, it is always better to start early, even if you start small, in order to fully benefit from compounding. The third reason why I'm confident, as I mentioned, is that we have a legacy and a mindset of persevering and succeeding in spite of challenges. Our journey to acquiring a majority stake in Guardian Holdings Limited was not absent of challenges, but we persisted as we navigated regulatory and financial hurdles. Following the 2020 Jamaica Debt Exchange, the bank became the leading financial institution in Jamaica based on profitability, despite suffering significant loss in income as a result of the restructuring of government debt. These are only two examples of the triumph over adversity, which I could mention. These experiences keep us undaunted in the face of new challenges. As Franklin Delano Roosevelt once said, and I quote, "A smooth sea never made a skilled sailor," end quote. There's another quote that says, "A ship is safest in harbor, but that's not what ships are made for." I would add, ships that stay in harbor will never see new sights and never see new destinations. At NCB Financial Group, we have set sail toward a new destination. We have navigated our share of rough seas, making us skillful sailors, and we continue with confidence in our ability to overcome existing and the inevitable future challenges to reach each new destination. With 185 years under our belt, it has been a long journey. However, fellow shareholders, I assure you the best is yet to come. At this time, I would like to kick off the observation of the organization's 185th anniversary. We celebrate all the shoulders who have held us up, our many employees, customers, and shareholders along the way. We are grateful for your loyalty and commitment, and honor all those who have been a part of our journey since inception, and those that continue to be a part of that journey today and going forward. Thank you, everyone, for joining us today.
Thank you, Patrick. We'll now move on to our question and answer sessions. And are you going to be moderating that, Dave?
It's a coin. Thanks, Dennis. So we have, Patrick, we can start with you. There are a few of the persons who have sent in questions have asked about the recent announcements of resignations of the CEO and CFO at Guardian Group. And the hope is that you can comment on why those would be taking place at this time and what are the replacement plans.
So in relation, I start with the CEO. As was publicly mentioned at the time that their resignation was announced, which was perhaps a few weeks or months ago, Mr. Tawari had indicated that he having spent some close to 30 years at Guardian and well north of close to 20 years in senior management. He had personal, personal aspirations that he wanted to pursue. And we had a discussion initially last year, off the record he was giving us that he was giving some thought to it. And then earlier this year, he said he thought he had come to the point where he wanted to hand in his resignation. And he was gracious enough to agree with us that it would be effective the end of the year. So we have essentially the rest of the year to make transition plans for that particular role. I should mention that the intention is that he will continue to serve Guardian as a non-executive director. That has been agreed with him, so he will not be entirely leaving the Guardian family. In terms of replacement, we have started that process of going to the market and seeking to recruit an appropriate person to fill that position. When that reaches the appropriate stage, an announcement will be made. In relation to the CFO, that was a little bit more sudden and more recent. What I will say in relation to that is that he has resigned for personal reasons, and I don't believe it is appropriate for me to comment beyond that in the circumstances, having recognized that it is, as I said, for personal reasons.
Thank you. And there was a question about the replacement of the CFO.
Oh, so at this point in time, we are asking someone internal to act in the CFO role until we make a decision as to a permanent replacement. I'm not sure if that has been announced, has it? It has been? Yes, it has been announced. Samantha Saw, who is currently the CFO for Guardian Life of the Caribbean, will act as the CFO of Guardian Holdings Limited. And we have a lot of confidence in Samantha. She has consistently demonstrated high levels of professionalism and capability in the execution of her current role.
Thank you, Patrick. We have some questions from Ralston Samuels that we will ask our bank CEO, NCBJ, that is. So there are more than one bank in the group. The CEO of NCBJ, that is Septimus Blake, Bob, to answer for us. The first is in relation to NCB's efficiency ratio. That has been trending up over the years to a high of 76.19% as at the financial year in 2021. Mr. Ralston Samuels, who has asked this question, is asking, can you please provide some perspective as to whether there is a credible case for delivering a lower efficiency ratio, and can you explain some of the things that are being done to get more efficient, perhaps down to the mid to low 60s or 50s region? He says he knows NCB did significant work on efficiency pre-COVID with all the technology investments and now branch reorganizations and so on. So what are the other opportunities, or are there structural factors supporting a higher ratio? So, Bob?
Are you hearing me now?
Yes, we're hearing you now, Bob. Go ahead.
Right. I lost connectivity. Thanks for that question, Ralston. I'd say in our view, a clear and credible case remains for delivering a lower cost-income ratio. Rationalizing costs is not a new priority for NCB. However, I'd say that the macroeconomic shocks related to COVID-19 has made it an imperative, and we would have responded to address immediate opportunities to address bottom line pressures in line with the COVID-19 pandemic. The focus now is on those structural cost transformation initiatives. And there are a few One of them is we're increasing our digitization across the value chain, and there's an urgency to make further digital progress around digital migration. And we will look to ensure that we sustain that momentum in terms of both the front office and our back office operations. A second key lever is us rationalizing the branch network. And what do I mean by that? We are very clear in terms of the distribution model that we want to pursue and what role the physical branch network will play going forward. A feature of expansive physical networks is high fixed costs, both in terms of maintaining the network and the attendant processes therein. And so we look to optimize the real estate footprint and the activities that we undertake within that real estate. We expect that transaction migration will continue apace, and that aligns well with digital adoption. There's a change in terms of in-branch focus, which is more on sales or advisory, and flexibility in terms of the formats. We are also looking at, structurally, what are some of those non-core activities that we can outsource to drive efficiency. In line with that, we are looking at various partnerships and ecosystems, as well as even shared infrastructure models, which will help us realize some of those cost efficiencies. And we will continue to pursue technology modernization, as was mentioned by the group CEO and also the deputy CEO. There's a continuous need to upgrade the technology infrastructure. So those are some of the levers which we expect to continue to, to pull on in terms of extracting a lower cost-to-income ratio.
All right, thank you, Bob, for that comprehensive response. Next question to you, also from Ralston Samuels, is in relation to asset quality. NPLs, non-performing loans, as a percentage of gross loans and advances, and NPLs as a percentage of equity attributable to stockholders have trended up, while return on assets and return on equity have been trending down over the period 2017 to 2021. Can you provide some perspective on how the changes in the macro environment may lead to further downside risk in our expected credit losses and NPLs? Will things get worse for NPLs? And how is management strategizing based on how the economy is expected to evolve? Will net interest income get much better with increasing interest rates, and combined with strong expense control, will this positively impact these key profitability ratios, ROE and ROA, given the trends to this point?
Oh, that's a long question, but let me put some perspective on that. So I'd say firstly, we are, as a group, as a bank, constantly refining our understanding of the implications at the macro level and how that transmits to our balance sheet and income statement. And so we are constantly forecasting key balance sheet and income statement items such as, revenues, expenses, loan losses, and the associated provisions and profitability. And we will continue to do that. I'll also say that NPLs have shown some signs of stabilizing. ROE would have declined in the years at the height of the pandemic, and I would attribute that to significant loan loss provisions. It is clear in our view that the ROE will obviously get a boost from economic recovery. The faster, the better. However, dampened loan growth will weigh heavily on net interest margin and may pose a challenge in improving ROE. We are, to counter that, we are placing renewed focus on fee-based businesses, our service model to reduce cost to serve, the pricing models with a view to counter that NIM compression. And I'd also say that, the bank in and of itself has a sufficiently diverse business model to adapt. And so despite the challenges, we remain optimistic on economic recovery. In relation to, rising interest rates, especially because of increases in the policy rates with a view to bring inflation back within the target rate. All things being equal, I'd say interest rate increases may boost the net interest margin. If interest rates on loan rise at a faster rate than the cost of funding. And we have been taking steps to, pass through some of these interest rate increases to our various activities. And so on new facilities, we would have, since I would believe the beginning of March, implemented some increases in terms of new facilities. And we are looking, at making some changes in terms of existing facilities starting sometime in this month, May. So all in all, I will say that, we are optimistic about the economic recovery. We, based on the evolution of our loan portfolio, while loan growth has been dampened somewhat, we think that NPLs have stabilized and that we are cautiously optimistic in terms of the evolution of our business.
All right, thank you, Bob. And while we're on asset quality, I'm going to swing to Ian Shuron for a question also on NPLs in relation to Clarion. What is the situation in that regard at this point? Has the NPL portfolio, the situation with the NPL portfolio abated? Is growth returning to the portfolio? Is the environment still accommodative? Ian?
Thank you very much, Dave, for that question. So with regards to the NPL, looking at the nominal values, I'm pleased to report that based on a year-on-year movement, our NPLs have reduced from a high of 91 million to 71 million, $20 million improvement, 22% year-on-year improvement. It's my expectation and forecast that we will see further improvement to the tune of approximately reduction down to 55 million within forecasts, which would be a year-on-year improvement of 36 million. With regards to the loan growth, things have been relatively flat insofar as our ability to grow our loan portfolio. However, in line with what Bob has just reported, I'm actually pleased in looking at the forecast for the remainder of the year and forecasting to actually see our loan balances increase to approximately 800 million from approximately 650 million a year ago. So roughly a $150 million increase, which will significantly improve our asset quality ratios. The primary focus of attention is around infrastructure-related facilities and those relating to sovereigns. And therefore, from a risk-adjusted return on capital perspective, these would be particularly lucrative to the group. Insofar as earnings impact, Bermuda is encountering slow economic recovery, slower than planned. But with that said, we are managing our portfolio from an interest income perspective well. We have seen a 10% year-on-year increase in our net interest income. And with rising interest rates, we expect to see NIM expansion insofar as both our loan portfolio and our investment portfolio that should enhance earnings. Thank you, Dave.
Thank you, Ian. And I should have indicated that question was from David Rose. Thank you, Mr. Rose, for that question. I'm going to return to another question from Ralston Samuels for Bob. Given, and this relates to capital and liquidity requirements, specifically in the context of Basel III implementation, given weaker economic conditions due to the lingering effects of COVID-19, inflation, greater levels of uncertainty, and in addition, the high level of volatility arising from activities in relation to Russia and Ukraine, how does management expect the implementation of Basel III and higher capital and liquidity requirements to impact returns and pricing to clients? And what opportunities is management looking at to optimize the balance sheet, to optimize risk-weighted assets, and to, of course, increasingly return capital to shareholders and improve returns?
Thank you for that question, Dave. So I'd say on average, based on our internal modeling, we anticipate increases in terms of both the quantity and quality of capital required as a result of the implementation of Basel III. And standing still, one would expect that those enhanced capital and liquidity requirements would likely affect the ROE, but we're not standing still as an organization. And so we're looking at elements around implications around pricing. We're looking at the composition of our risk-weighted assets, the segmentation, looking at assets which may have lower risk weightings. Again, and I would have stressed this earlier, we're looking at our fee-based businesses which are not capital intensive. And we are also looking at opportunities in respect of some of those direct deductions from capital, example, software and so on. So, we are focused on ensuring that we generate, sufficient earnings to drive, capital to grow the business, satisfy the prudential regulations, but also to generate an appropriate level of return to our shareholders. And, we're talking about dividends and so on. So we are confident, we are modeling and anticipating whatever changes in our business model will be required. The Bank of Jamaica would have, highlighted to us that the planned implementation is for January 2023. So we are focused on ensuring that that transition is smooth and without having any attendant negative impact on the business generally.
Thank you, Bob. And since you have the floor, or maybe we're picking on you a little bit this quarter, another one for you, this one from Stephen Jackson. The NCB stands to make significant amounts from the rising interest rates to which you referred earlier. What about, and if you look at top line revenue, what about the impact though on loan and mortgage demand? What are your thoughts on what is likely to happen in terms of the net effect of the higher interest rates?
So, as I would have said earlier, all things being equal, interest rate increases could boost our net interest margin. And that's on the assumption that loan rates or assets rate rise at a faster rate than the cost of funding. Obviously, if we see, depending on the rate of increase in interest rates, it may dampen demand for loans. And so we are managing that, so mortgages could be impacted in terms of, new mortgages booked at higher rates, and also the potential for existing mortgages repricing at current rates could put pressure on debt service abilities. And so that's something we're continuing to monitor. So, but on a net level, to the extent that we are optimistic in terms of the recovery, for the time being, we believe that it could be a net benefit to the organization.
Thank you, Bob. And going to another question from Mr. David Rose, this one for Mr. Hilton. While the Jamaican economy has reopened, there are several threats still permeating through the environment, and I think you would have mentioned some of them earlier when you spoke. A few questions arising from that. First, how is the group dealing with inflation beyond fee increases? And second, where does NCBFG see itself in its 2024, well, he says 2025, but I think our plans take us out to 2024 at this point, with certain limitations no longer being in place?
So the first part of the question was around how we're dealing with inflation apart from a strategy of price recovery, right? And I think in many of the points that Bob made earlier, he spoke to what we're doing about improving efficiency, about being more innovative in the way in which we deliver financial services, because part of the challenge that we've all faced and which we have been contending with is how do we simultaneously improve the quality of service while reducing the cost to serve, right? And we have a number of initiatives, we have a number of strategies that we have been putting in place to achieve this, including even the spawning and launching of our FinTech link, right, which is part of that strategy, part of that process. Bob also spoke to a number of initiatives being undertaken by the bank to improve its internal efficiency, right? To at the same time, while improving its efficiency, leveraging technology, leveraging data, leveraging digital, right? Leveraging all the various capabilities that we have, improving our efficiency. It applies to the bank, NCB in Jamaica. It applies to Clarion, where we are pursuing similar efforts, and the same thing is happening across the insurance companies through the Guardian group of companies. So overall, there is a whole comprehensive set of strategies, of policies, of initiatives, all with the same focus of improving efficiency while improving the quality of the service.
Thank you, Patrick. Another question for you from, and this will be the last one for you, from Mr. Rose. Can you comment on why NCB's health insurance portfolio would have been awarded to its direct competitor rather than to Guardian Life?
Sure. So I think this is something that was previously prosecuted in the public domain. We have explained that this goes through a competitive process, right? The way in which the insurance arrangement is designed, health insurance, is that the staff pay a portion, a significant portion, and the organization contributes a portion. And so it goes out to a competitive tender. And the competitive process can yield different outcomes in terms of the offers that we get. And clearly, Guardian felt that there was a price point at which it didn't make sense for them in terms of the model that they're pursuing. And Sagicor was able to offer what would be a more competitive pricing in that context. And so we took the more competitive pricing. And, interestingly, one of the things that I think we're not necessarily, intuitively recognizing is that the fact that somebody else gets it, even if it can prove accretive to them, the fact that it would not have been accretive to Guardian means that Guardian not getting it was beneficial to Guardian, right? So we recognize we have had in the past where both institutions have bid at one stage. Guardian offered more competitive price and they got the business. This time, from an NCB perspective, the more competitive offer came from Sagicor, so Sagicor got the business.
Thank you very much, Patrick. And yeah, I think that takes us to the end of the questions that we are going to take, just as we were changing interpreters. But such it is. Thank you very much, Patrick, as I said, and just to indicate to the persons who may have asked questions that did not get answered in this segment, I think it's only one person whose questions were not covered in full. As is our custom, we will ensure that a shareholder who has asked questions that were not answered during the session gets emailed responses from our investor relations team. Back over to you, Mr. Cohen.
Okay, thank you, Dave. Well, I think we've had another, that's really insightful investors brief. For me, it's always interesting to hear the perspectives and to share our own insights, and also to get feedback from the investor community about what their concerns and their own insights are. I'd like to thank everyone who has participated, and certainly from the directors, management, and staff of NCB, we want to thank all our stakeholders. And as usual, we look forward to hosting you at our next quarterly briefing in a few months. Thank you all, and that's it for now. Thanks.
Saving is easy with an NCB Quick Save account. All you need to open one is a valid government ID, your TRN, and a minimum of 100 Jamaican dollars deposit. Visit the link for more details.
Become a game changer in the NCB Capital Markets Analyst Program and chart the future of alternative investments, portfolio management and trading, investment banking, and so much more. Do you have at least a first degree in actuarial science, banking and finance, or related fields with a minimum GPA of 3.4 and are ready to change the investment game? Scan the barcode or visit bit.ly/analyst program and apply by May 27. Be a game changer with NCB Capital Markets Limited.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
We know what you want to do more of, and it's not waiting for life to happen. You want to explore more. New worlds, different passions. You want to share more. Amazing experiences, knowledge. You want to care more. For yourself, for the people around you. We know you want to do more things in life, so Clarion does more for you. In choosing the right experts to meet your every need. In products and services to reach your goals. And now, we do more than any other bank, digitally. Empowering you with new technology in the hands of best-in-class professionals for more convenient digital tools, a more seamless banking experience, and more precise financial solutions. Clarion does more to bring you, your family, or your business into a new world of banking, so you can do what you really want, to live more. Clarion.
they make is to simply let the world know they're here. And then it's our duty to help them show the world why they're here in the first place.
Give them every advantage with the Guardian Achiever, a plan that provides for their educational dreams and protects their health and life in the process. For more information, call 888-4LIFE to speak to an advisor or visit myguardiangroup.com.
Introducing the new NCB On-The-Go account. Live your way with a new flexible account to manage your transactions 24/7. With NCB On-The-Go, you get free deposits, free ABM transactions, free bill payments with no monthly service charge, and no minimum balance fee. To open your account, you need your TRN, GOJ identification, proof of address, proof of income, and $2,000. That's it. Learn more and open your new NCB On-The-Go account online at jncb.com/on-the-go.
Saving is easy with an NCB Quick Save account. All you need to open one is a valid government ID, your TRN, and a minimum of $100 Jamaican deposit. Visit the link for more details.